Very good morning, viewers. This is Abhijit Chattoraj. Uh, I'm currently the chairperson of Insurance Business Program at Birla Institute of Management Technology. And on behalf of BIMTech, uh, I welcome all my viewers. And today I have with me one of the titans of insurance industry, a very well-known thought leader, Mr. Arun Agarwal. And we'll be discussing about his latest monograph, which is known as Insurance Governance for World's Largest Democracy. This is the monograph, if you can see it properly, this is the monograph that we are going to discuss today. And, oh, sorry, is it coming?
Yeah.
Okay, this is the monograph we are going to discuss today. So this is part of a trilogy in the sense that two more monographs have gone before it. The first monograph was Transformative Agenda for Indian Insurance Industry and its Policy Framework, way back in May 2017. And it was followed by, at the behest of Government of India, another monograph, which is known as an Implementation Agenda for Insurance Regulatory and Development Authority to transfer its regulatory framework. So this is the latest, and as I said in the beginning, it is known as Insurance Governance for World's Largest Democracy. For our viewers, Mr. Arun Agarwal was the founder, CEO, and MD of MS Cholamandalam, and he served various other organizations before taking up writing assignment very seriously. And we at BIMTech, we are the knowledge partner of this particular monograph. And as an institution of repute and reckoning, we thought that it is better that we also become part of this transformative journey along with Mr. Arun Agarwal and Mr. H. Ansari. So let me discuss the first. So let me understand from you. What did motivate you to write this latest monograph, Insurance Governance for World's Largest Democracy?
Thank you, Dr. Chattoraj. First of all, very good morning to you. And also a very good morning to all our viewers. Yeah, it's a very good question. Actually, the whole journey started not even 2017. The whole journey had started much before 2017. But in 2017, when we came out with the first document, which was a transformative agenda for the insurance industry, it went all over. It was also caught up with the government of India, which also called us for discussion, Mr. Ansari and myself, And the Ministry of Finance actually went through our document and they commended the effort, and they felt that it was quite appropriate that we really the ones who are talking about the transformative agenda and what it takes to transform the industry. Because when we're trying to suggest measures to transform the industry, the idea behind is that it must be made much more effective and efficient. Because when it's both effective and efficient, it draws in more policyholders, it makes them more inclusive. It also ensures and prepares the groundwork to have more and more penetration done. So that was the idea behind our first monograph. As I said, it was picked up by the government, and then the government requested us to come out with the second monograph as to what are the measures we would recommend to ring in the regulatory changes. So that's why the second monograph that came out in October 2017. And then there was a lull, and there were a lot of meetings that were held between us and the government. And then somewhere in 2019, early part of 2019, we heard the Prime Minister's vision come through, and that vision was to get India into $5 trillion economy sphere by 24-25. And then we started deliberating ourselves, and we said that what it will take to get the economy there. So it means that every sector will have to contribute healthily. That includes the insurance sector. And, uh, and therefore, with this realization, we thought it's a appropriate time for us to then get into the entire gamut of governance. Um, that includes all the processes, that includes all the vision document, and to state that framework in a very affirmative tone, in a very affirmative, sense. And that was the reason we chose to come out with this latest insurance monograph, which is insurance governance for the world's largest democracy.
Right. Thank you, sir. To my viewers, let me also tell you that BIMTech is the knowledge partner, and the foreword of this particular monograph has been written by Dr. Abhijit Chattoraj, Director, Birla Institute of Management Technology, and by Mr. Saket Khetan, his senior partner, Khetan Legal Associates, and also member Board of Governors of BIMTech. And they have penned the foreword, and that's how we got associated with this monograph, and we consider ourselves very lucky indeed to be associated with this monograph, which is going to redefine the regulatory governance of Indian insurance industry in days to come. So you talked about that the regulatory framework should have the capability to take the industry in right direction, and also bridging the identifiable protection gap at different stages of the market development. There are two important words that you insisted on. One was capability to take the industry in right directions, and then bridging the protection gap at identifiable stages, at different markets, different stages of market development. So I would like to understand what exactly you are trying to drive at when you're mentioning that the regulator should have the capacity to take the industry in the right direction.
All right, thank you. I'll take the second point first, and which is about the penetration bit. There was this global research, Dr. Chattoraj, that was carried out, I think, around 2012 or 2013, and which said very clearly that in case any society or any market which is able to increase its penetration by 1%,
right,
it means a lot for that particular market, in the sense that the uninsured losses will actually come down. It means that the taxpayers' money will be channelized in a more appropriate direction. And most importantly, what it means is that when you have this kind of penetration which is taking place, it will mean additional investments accruing to the economy of little under 2% of the GDP. Now, normally, you would have heard people saying to you that, look, as the economy increases, so will be the penetration. But here the global research is telling us very clearly that in order to get the economy growing, you need to increase the penetration. So once you have understood this relationship, which is a very direct relationship, then the second point comes in: how do we do it? And the only way in which you can do it is to raise the capabilities, to raise the capacity. It's not even capability, it's all about capacity, Dr. Chattoraj, because capacity building is much more affirmative, and capability is a little, it's not so appropriate. But I think capacity is much more appropriate here. And when you talk of capacity, you're talking about an ability which will give you the strength to keep on increasing it all the time. It's extremely affirmative, and the capacity building will take place in terms of the right policies, the right direction, the right framework, the right partners, the right change makers, and therefore you really set into motion the entire chain of events which will ensure that you really head yourself in the right direction.
But the question is, yes, sir, even 1% increase in penetration will really call for huge exercise. Looking at India's penetration, it's only 3.76. Non-life is close to 0.94% only. And increasing it to another 1%, I don't know how to go about it. I was looking at the health protection gap. It's close to $200 billion when it comes to India. How are you going to bridge that gap? It's a huge gap.
Yeah, I agree. It's a huge task, Dr. Chattoraj, but that's precisely our effort has been. Rather than get daunted by the huge task, if you dedicate yourself to the vision, and the vision is very clear that you really have to increase the penetration. Now, that's also not the entire vision. When you talk of penetration, you're ultimately talking of inclusion. And linked with the penetration are not just inclusion, but also the macroeconomy, which really comes in the right perspective. So when you talk of penetration, you're talking about inclusion, and you're talking about the macroeconomy increase. And when you have these goals and ideals and the vision in place, then you will do everything under the sun to ensure that you are there in the right place at the right time. And then you start really looking at those mechanics. Now, those mechanics will involve finding out who exactly are the stakeholders. And when you talk about stakeholders, you're talking about the entire world of stakeholders. You're starting with government, you're starting with legislative setup, you're talking about the regulatory setup, you're talking about the self-governing bodies, you're talking about the entire market, and of course the players themselves, And that is why this particular document is insisting that you don't talk of shareholders or a set of particular stakeholders. You talk of the entire set of stakeholders, because then when you identify them, then you can weave a framework which will insist on collaborative effort. And when you have the collaborative effort and somebody then takes the lead, in this case, a regulatory office, it can then weave into a pattern all the other stakeholders and lead them into one single direction. So that's how it gets done. But I agree with you, it's a huge task, but you have to start somewhere.
Okay. Then if you look at you want that the government's vision for IIDA must be to promote inclusive, fully penetrated insurance, the regulatory accountability. You are talking about regulatory accountability. And when you are talking in terms of regulatory accountability, the most important thing you are looking at to provide ease of doing insurance business. Looking at the ease of doing business in India, India is placed somewhere around 68th rank, and the ease of doing business has improved over a period of time. But there are still many constraints in the way. How to go about it if insurance really has to flourish, the business has to flourish in India? What exactly needs to be done in terms of ease of doing business?
Dr. Raj, first of all, let's start with accountability. You mentioned regulatory accountability.
Regulatory accountability.
I don't mean accountability which is going to be thrust on regulatory authority from somewhere outside.
Right.
When you are really placed yourself in a regulatory position, what we mean is that you are actually a conscience keeper. So then you're really talking about the self accountability. That's number one. Number two, your purpose and objective is also very clear. Your purpose and the objective is to promote insurance, is also to ensure that you supervise it very, very well. So it is both promotion and supervision. And also on top of it, you have a self-accountability concept in view. Now, let's come to the other question, which is the ease of doing insurance business. Now, when you really talk of ease of doing business, you're talking about the World Bank Index where we've been placed at 66th position. Now, if you really go through and see the components, you're going to be talking about the land title, you're going to be talking about the electricity, and there are many components which actually go on to ensure that you really come up in the index of ease of doing business. But here we're talking about ease of doing insurance business. Now, when we talk of ease of doing insurance business, slightly different from what the overall concept is, which is ease of doing business. Now, before we get into the nitty-gritty of ease of doing insurance business, let's talk about what exactly is ease of doing business in a philosophical sense. And if you really have to look into the philosophical sense, you have to go back to Arthashastra. Now, what does it say? It says that no man you transact with shall lose, then you shall not. It means it says very clearly to all of us, from ancient times, we have to make others as winners. So if the government is there, legislative bodies are there, regulatory authorities are there, self-regulatory authorities are there, their first and foremost job is to ensure that they have a framework in place which is making the entire market as winners first. So when you have that philosophical clarity obtained, then you'll find out and also start working on the entire framework. What exactly can I do to ensure that I make others as winners? You're talking about the entire set of processes. You're talking about the regulations. You're talking about legislations. The entire gamut of the governance, the world of governance, and that exactly is the thrust of this work, is then coming into play. And when you talk of governance, then you start with legislation. So what does it mean? Now, it's the legislation job is to legislate. But what we're saying in terms of governance perspective, we are saying that, look, you should be giving direction, the overall direction as far as legislation is concerned. So
Sir, if I could interrupt here, the legislation, to what extent the legislation is conducive in Indian context? Look at the amendment, 2015 Amendment Act, which is mostly influenced by the Insurance Act 2015 UK. The UK Act made a number of changes, and that facilitated the insurance business in UK in a very, very positive manner. Unfortunately, that did not happen in India. It's hardening of act, in your own words, the way you have written in the book. So that has not really helped the cause of insurance growth in India.
That's a very good question, Dr. Chattoraj. Insurance amendment, which was carried out in 2015, did go a long way. Number one. Number two, it also devolved a lot of powers and a lot of authority to the regulatory office. But what we're saying is that principally, conceptually, the primary legislation ought to be such that it just gives the direction. It must empower the secondary legislation such that it is becoming dynamic. Because ultimately what happens is that, Dr. Chattoraj, even if you really look at the 2015 amendment and right, the aftermath of it, there are a whole lot of issues and areas where the parliament is still there to legislate. Now, the market, as you know and as I know, is always so dynamic. Number one. Number two, insurance market in particular is linked with the global events. It is linked with all the development all around the globe. So if the market is so dynamic, if the market is changing so dramatically, obviously then the regulatory office also has to be in step with those market changes. But then if we are constrained by the fact that if I really have to make changes in my primary legislative setup, I have to go and knock at the doors of the central parliament, or the parliamentary body. It'll be very difficult. It'll be rather late at times, and you may fall behind in terms of competitive rules and regulations. So what we're saying, as again as a governance philosophy, if you have a direction set in the primary legislation, and then most of the powers are left with the regulatory office as a secondary legislative setup, then that this particular body being in touch with the market on a day-to-day basis, like what happened in Singapore, like what happened in UK and elsewhere in all of the developed countries, will be able to then come up with solutions which will be much more market friendly and much more in tune with in order to ensure that the competition is encouraged and given fillip to.
No, my only reservation was that the legislative environment in India is not as conducive as it should be. I was looking at the UK law, the way the remedy of the breach of pre-contractual information duty or pre-contractual duty of good faith changed in UK market has a great bearing there in the way the warranties and conditions are interpreted in UK today. Has really changed the way of doing good business in the UK market. That really did not happen in Indian market when we were going for the amendment in 2015. Possibly we did not look at the UK Act while drafting this new Amendment Act in India. That's somewhere, I have a feeling the legislative environment is not as conducive as it should be.
That's a very interesting dimension you brought in. I'm very thankful to you. Now, what happens is that there are two aspects to the legislation, Dr. Chattoraj. One is the administrative set of rules and regulation, which is your Insurance Act of 1938, which was amended in 2015.
Right.
Now you have another set of regulatory framework, which is directly intervening into the contract, the law of contract, insurance contract.
Right.
And in our case, it is the Marine Insurance Act of 1963.
Right.
Actually gets into the conditions and warranties, etc., that you mentioned. Now, incidentally, when you talk of the UK, this was enshrined in 1906 law. And after almost 100 years, they decided it is time to get into the contract, the law of contract, and then try and really make sure that it is made absolutely contemporary. And that's also one of the recommendations we have made in our governance book or the monograph. And we're saying that you should not only get into the Insurance Act of 1938, amended in 2015, and make it more contemporary, but also try and get into the law of contract. And therefore, see, what's also happened is that this, I think you might know better than I do, is that ever since we've come up with our, the framework of laws and regulation, and especially the policy framework in terms of the conditions and warranties and what to be paid, what not to be paid, etc., etc. Now there has been a huge body of court interjections. They have come out with a lot of amendments, with a lot of directions. So it is absolutely appropriate that we have a body set up which will actually get into the law of contract, law of insurance contract, and makes it extremely contemporary. So you're right, absolutely, and this is required to be done.
When we look at the right reforms that you have been discussing in this book, and you mentioned that it's very, very prescriptive and the regulators micromanage everything in India. And Yes, and in the process, what has happened, the obligatory development package has not been really delivered. Could you expand this point of yours that you mentioned in your book?
Yeah, as I said, there are two complementary roles the regulatory office has. One is to supervise, which is absolutely clear. The other is to promote and to develop the insurance market in India. And that is why the Insurance Regulatory Office was actually renamed as Insurance Regulatory and Development Authority of India, early 2000. And that's absolutely on the lines of Singapore market, etc., etc. Now, what happens in a developed market is the market is so well developed that all the regulatory office has to do is to ensure that you have a even playing field created for players to really then start operating in. But in markets like India, which is so vast and which is so disparate, it is important that you have a promotion wing in play, uh, if not more, but at least as much as a supervisory wing in play. And how do you do it? You do it because then you realize that there will be certain issues that I shall like to do it myself. There will be certain set of issues I shall like to do it through the self-governing bodies. And in our governance framework, we have come out with those. And even in those areas which I have to supervise, I must be very clear in terms of defining what ought to be the prudential set of regulations and what ought to be the conduct set of regulations. Now, if you really run through the
And
entire...
and in your books, in your monograph, you mentioned that most of the conduct regulations go on as prudential regulation. That's one point.
Exactly. That's the point that I'm trying to say here, that if you really look through the entire body of the regulatory framework, you'll find majority of the areas are actually the conduct areas. And when you have the conduct area, then all you really have to do is to come out with minimum standards, minimum guidelines, minimum standards. And then you leave the players to operate within those guidelines, with those set of minimum standards. But then the rules of the game are so very clear. The players are told in advance that, look, if you breach, then the action is going to be harsh and severe. It's going to be telling. And as far as the prudential is concerned, it's very clear that the highest amount of prudence, highest amount of trust actually comes into play. So that's a very small set of rules which actually are there in the play. So if you recognize that you have two sets of regulatory framework, two sets of regulatory issues. One is prudential, the other is the conduct. Your life becomes extremely easy.
So where did the regulator really bungle? So too many conduct regulations coming in place, and that really affected the market, the growth of insurance business in India?
Yeah, I think, as we said, most of the contract regulations are there in place as prudential regulation. But I think of late, what has happened is that I'm seeing now more and more emphasis being given on the contract regulations. Though the edifice is still remaining the same, at least there is greater emphasis now to insist that the conduct regulations means conduct regulations, and therefore you guys have to conform to it. And if you don't conform, we might come down a little more hard on you. And work remains that you really have to consciously work in coming out with a framework which is clearly divided between the prudential set of regulations and the conduct set of regulations, and then come out with your definitive asks from the players. This is where I have come out. Now I'm asking you to conform. I'm here to promote. I'm here to support. I'm here to guide. But then there are areas which are areas of no-go. And if you do transgress, to be ready for the consequences.
You talked about change makers. And you believe that the community of change makers, the central legislature, the central government, and the IRDA must together help convert the science of insurance into an implementable tool and technology. And you're talking about the single window ownership. What do you really want to imply here?
That's where we began. When we started defining the governance, and when we said, who are the stakeholders, and we defined stakeholders as set of bodies, including the central legislative body, the government, the regulatory office, the self-regulatory office, the market. These are, and of course the payers. These are all the stakeholders who are involved in the collaborative process. But I think having decided to define the vision, and that's very clearly defined in our monograph, having decided to come out with those change regulations, then we said, let's try and find out who are the change makers. And when you really come out with the change makers definitive setup, then you start with the legislative setup, and that's where we began to say that, look, the legislative setup must be set up in such a way that the principal set of regulations ought to be more directional. It cannot be that, look, I go into the supply management as well as I go into the demand management. Let the supply and the demand management be catered to by the secondary regulatory setup. But as far as the principal legislative body is concerned, my job is to ensure that I give direction. I want my insurance setup in India to be among the most competitive setups in the world, because that's where you start doing the benchmarking, and having given a definitive direction to the market. This is what I want. And the second direction would be that I want a penetrative society. I want an inclusive society. So these are the two demands. You're keeping it clearly as far as the direction is concerned. And then you give the complete authority to the secondary legislator, which is the Insurance Authority of India, and saying that, hey, now you have the legislative authority on my behalf, and you go forth, and then you start bringing about these so these then become the change makers. And then, as I said, the regulator in his wisdom would understand that, look, I'm an administrative setup, I'm not a technical setup. So let me find out the bodies in the market which are technical setups, and then we've identified those bodies in our governance framework. And we are saying that those bodies which are the technical setups, the regulator consciously then gives them authority to self-regulate, and those are called as self-regulatory bodies. So these become, Dr. Chattoraj, these become the change makers. So you have the central legislative setup, you have the government, the regulatory office, self-regulatory organizations, and that's how it starts cascading down.
When you talk about insurance inclusive society, what exactly do you mean? Do you mean that every section of the society get an insurance cover so that they can deal with the shocks and various risks?
Absolutely. Because this COVID-19 actually has already demonstrated. If you and me, and if somebody in our family, if we had taken the proper cover, and unfortunately we were the ones who actually got caught in the pandemic, imagine the kind of comfort it will give it to us, and imagine the kind of discomfort it will give it to us the moment we realize that, look, we are extremely lonely. We are absolutely going to cater to ourselves. There's no one else to cater to us. We are absolutely uncovered, and the kind of anxiety it will give it to us. So that is what it means when you have a fully covered society. it gets into the arena of inclusiveness, which is what we've talked about.
Your monograph did mention about microinsurance. I believe microinsurance is one way of reaching the marginalized population. And there is a lot of demand in that population. Not most insurers believe that there are not events, a low ticket size and very difficult to reach. But on the other hand, this particular segment, which is neglected, there is a lot of demand, and nothing has been done to really activate those dormant demand. All the work that when we think in terms of reaching them, we think in terms of supply side, from the angle perspective of supply side. We have never really looked at the demand side perspective. Why is it so, sir? When I talk of governments and
I'm really thankful to you that you're asking a very, very pertinent question, Dr. Chattoraj, and it's very interesting. Now, and that also goes into the amendment of 2015,
right,
1998, etc., etc. Now, when you have a legislative piece which lays down the entire framework of ensuring how the supplies have to be made, and also talking about, so that means it is casting the responsibility on the suppliers to raise the demand. And any student of economics will tell you that, look, those are different issues, So if you leave the demand to the market in commercial insurances, or to the government in non-commercial areas, in those populations which are below the poverty line, population below or just above the poverty line, which is then becoming the job of the government. So that means they are really the ones who are going to cater to the demand side. Now, if you really have demand being catered to by the government in our society, then all the regulatory office has to do is to ensure that there is the right supply. So then you're segregating the supply and the demand issue. And when the moment you have the demand created, you will ensure that there is an adequate and right supply, which will cater to both these areas. Now, this is as far as the traditional insurance are concerned.
right.
It gets into non-traditional areas also, talking about the micro insurances,
Right.
and which is where the mutuals come in, and that's exactly another thrust of the area that we have pitched for in our document, saying almost more than $1 trillion of insurance world over is actually coming through from mutual insurances, And I know China has been a late comer to the party, but having realized the importance of the mutual insurances, they now have come up with mutual insurances in a big way. Unfortunately, what has happened is that there was a mutual insurance available to us prior to
2015.
But then, for whatever reasons, this has been taken out. Now, it's very important.
Was it a mistake or it was consciously?
I will not be able to tell you, Dr. Chattoraj, because to be very fair with you, the only thing I can think of that probably it got linked with the cooperative setup, and then probably the framers, legislative framers at that point of time decided that, look, we're really going to get into the real corporations rather than cooperatives. Probably it got dropped, But then the moment you realize there's nothing to do with cooperative setup, etc., we're talking about the mutual insurances, which has got to be in place in our imagination, in our concept, in our framework. You'll be able to do it.
I believe that is a great disservice done to the growth of insurance, because mutuals, as you rightly mentioned, through mutual business is coming all over the world, and something India needs to look at if you really want to address issues of governance in India. Sir, when you talk of ease of doing insurance business, you in particular mentioned about the self-regulated market mechanisms, and you have a feeling that they have not been allowed to be run as self-regulated. a lot of interference is coming in the way of their functions. If you could throw some light on this particular issue that you have mentioned in your monograph.
Our monograph actually is dealing with all the conceptual issues, So,
Absolutely.
in terms of the concept, it's very clear that you really have to have the self-regulatory organization in place, And the fillip first comes from a realization from the regulatory office that, look, I can't possibly be doing everything myself, Number one. Number two, I need to be understanding this concept very clearly that I'm an administrative setup. I'm not a technical setup. So any technical setup which is outside of me existing in the market, whether it is a surveyor's body or a broker's body or an insurance body or any so on and so forth, I must then be able to give them recognition, because mind you, one more particular realization. Some of these bodies have been in existence longer than the regulatory setup, And if they're the technical setup, they've been in existence longer than the regulatory setup. And if they're doing already a good job, all you really have to do is to ask them to come out with a specific code of conduct, And then the moment you're able to go through and scrutinize that code of conduct, then you leave them the entire gamut of function, be in terms of accreditation of players, be it in terms of training, be in terms of their own conduct mechanisms, ensuring that if somebody is not conforming to their own code of conduct is dealt with in terms of the framework they have already come out with. So your life then becomes far more easy, And then the moment you make sure that your life becomes easy, their life becomes easy, the direct impact is on the market. Market has no choice but to grow further.
One particular chapter you have dedicated on principle-based regulatory framework. I'm reading from your monograph. The ease of doing insurance business framework recognizes a principle-based platform where right to regulation and their prudent management would constitute the right insurance governance framework. So you talk about right to regulation, you talk about their prudent management, and that will ensure right insurance governance. So in three places you use the word right. If you could throw some light for our viewers, what exactly, why was this emphasis on right in so many places?
I think you raised a very interesting question. We aren't talking about good and bad.
Right.
We're talking about the right regulations. And that's the right emphasis actually. So having decided on the right emphasis, I'll give you one instance. Having decided the whole regulatory setup into prudential framework as well as into conduct framework,
Great.
One of the very important prudential set of regulations are around the risk-based capital. Now, in American market, in European market, Solvency I and American, it's been a different nomenclature, has been there for a very, very long time. Despite the capital-linked, risk-based capitals mechanism in place, you still had the meltdown in those markets in 2008. So therefore, they decided that that's probably not adequate. And they decided that it is time to really talk about the entire economic linkages to the insurance risks. So therefore, they started questioning their own methodology, and they said, let's work on a different setup. And that's how they started working on Solvency II. And then they started doing this in 2008. They came up with the final solution on 1st of January 2016. Look at the ingenuity of the Chinese market. They decided that it's one form of prudential set of regulations, which is so important for our market. And we've got to have this in place, despite the fact I did not have the enabling platform which the European market and American market had in place. And they started working on around 2012 or 2013. And they managed to have a risk-based framework called CROS in place on 1st of January 2016. We started working this in 2010, late
Yes.
2010, and then we're still not reaching there. So at the moment you realize that you have to have principle-based framework, you have to have a proper segregation between the prudential set of norms and the conduct set of norms, and then you start working on the time framework and who will be the people actually who will come out with the change management. You should be able to do it very, very easily, and that's exactly what we try to point out in our and that's why we're calling it governance framework, which is what we
Right.
expanded.
Right. You quoted two of India's leading personalities. You quoted banker Uday Kotak and Mr. G.N. Bajpai. And when quoting Mr. G.N. Bajpai, you mentioned that what he suggested, that product basket, distribution channels, selling techniques, and go-to-market and regulatory design framework must undergo a comprehensive re-engineering. This is what is being suggested by Mr. G.N. Bajpai. For our viewers, Mr. G.N. Bajpai is also one of our members of the governing body, and this is what you have quoted. He is one of the most well-known name in insurance industry today. He was chairman SEBI, he was chairman LIC, and that's the reason his words are very, very valued. He mentioned about comprehensive re-engineering. It's not this re-engineering in a very small manner. Comprehensive re-engineering, that is what he suggested. Yeah. So what exactly is meant by comprehensive re-engineering? What is that he is hinting at?
Thank you, Dr. Chara. I'm very happy that you really pointing these out. Some very fascinating insight actually came forth from these two gentlemen. Mr. Uday Kotak, as you might be aware, is the one who actually had handled the SEBI committee, which is in the corporate governance norms. So he's the one actually. He is the pioneer in some sense. And when I quoted this particular remark from Mr. Uday Kotak, he was saying that, look, the principle-based regulations is something that has been enshrined in our text, right from ancient times. We've always, our society has actually been, has been there around principles, certain principles which have stood the test of the time. And if you really seen his latest remarks in one of the fora. He's now the president of the CII, and one thing that he recently said is that, look, there should not be any discrimination between the private setup and the public setup, public sector setup. I mean, I've always maintained this. It's never a battle between the private and the public. It's always a battle between the efficient sector and the inefficient sector. Anyone can be efficient, anyone can be inefficient. So that's why I chose to bring in Mr. Uday Kotak. Interestingly, I chose to bring in Mr. Vajpai because, as you pointed out, that he's been chairman of the SEBI, he's been chairman of LIC. He's one of the leading thought makers thought leaders in India. And I was very fascinated with his description, saying that, look, we should not only have re-engineering, we must have comprehensive re-engineering. And what it meant was that that exactly is something which is resonating with our governance framework. And our governance framework is actually talking about the comprehensive re-engineering, and that's why we chose to quote him. And our governance framework is nothing but comprehensive re-engineering.
Looking at the foreword, which is written by our own Dr. Chaturvedi and Mr. Saket Ketan, the introductory line mentions that there has been attempts in the past to reimagine India through many lenses and perspectives. Commentators have used varied epithets to present the Indian story from a breakout nation to incredible in India and rediscovery of India. The Indian insurance industry is also at the inflection point. I'm sure that Indian insurance industry at the inflection point, that's precisely as rightly put here. If you could throw some light here, what exactly is the inflection point? Where Indian insurance should go from this point? So
I think the inflection point is
if I quote the famous movie, the core bodies, where the destination is, where the insurance industry should finally look at.
Yeah, I think there are two points here, Dr. Chattoraj. Two broad points. Now we've come out as you're aware in terms of the Indian tourism. We've got this tagline, "Incredible India."
Right.
Now, in the recent years, we've started telling ourselves that, look, incredible India is not sufficient. We need to have credible India. And when you're talking about credible India, the credible India will happen when all the goods, all the services, the entire sort of manufacturing, the agriculture, the services sector, any sector and every sector will present itself in a very credible manner. So that's the linkage between the. So I'm saying from incredible to credible is the journey that we really have to take, and that's where the inflection point is. And when you talk of inflection point, as I said, the Prime Minister gave a clarion call to say that, look, by so and so, I need to have $5 trillion economy. Now, it can't happen if you don't have the inflection actually understood. And when you understand the inflection point, you start working how to get there. So that's what I called it as the inflection point. Number one. Number two, in terms of insurance story specifically, we've been around for a very long time. If you know that the first entity that came into being was in 1850. We're more than 150 years old. I think it was a Trident was the first insurance company that was set up. If I'm right, you may correct me.
Right.
But it's more than 150 years old. And then after independence, we are more than 72 years after nationalization, and after further opening up, we're more than 20 years old. So we are more than an adult in that sense. So therefore, we are saying that even in terms of its own journey, the insurance industry has now reached at a point of inflection, and it's mature enough to be able to then start working on areas and tasks which will actually bring us on par with the very best in the world.
Good institutions make good economy and good society, and therefore governance is the most important, the pivotal role the governance plays. If you're a good institution, your society is good, your economy is on the right track. Possibly, this is what you are implying at through this monograph, Insurance Governance for the World's Largest Democracy. Thank you, Mr. Arun Agarwal, for talking to us, and hopefully we look forward to many more in a simple word, many more good things coming from you in days to come. You have just started. I know you are working on many other areas, also governance at a larger scale you are looking at. But the insurance governance is definitely one monograph. I'd rather recommend that everybody who is remotely even connected with the insurance industry must go through this monograph, and then they will come to know that what it really means by governance of insurance industry. Thank you for talking to us. Thank you for this wonderful monograph that you have given to us.
Dr. Chattoraj, thank you so much.
Occasion to talk with you.
Thank you so much first for this interaction today. Secondly, for actually to you and to the entire BIMTech to have supported our endeavor. Right. And I shall only end with this closing remark that the whole idea is that inflection point in our understanding means that from a povertarian syndrome, we must start talking about the prosperity syndrome. And
Absolutely.
believe me, prosperity syndrome is extremely infectious. The moment we understand that, the moment we start working, I will make sure how can I enrich you. You'll in turn give the infection to the third person, fourth person, and that's how
Absolutely.
it spreads. Thank you so
And
much.
it travels very fast. It travels very fast. Thank you
Thank
so much. Thank you so much for talking. Thank you so much once again.